And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Valentine's Day to my friends, family, and fellow futures traders. It is time for the market preps. February the 14th, Valentine's Day. Be good to your loved ones today. And my name is John Hoagland. Thanks for trusting me with your time. As always, our focus always on finding good context, accurate context, good risk management, and staying patient in our trading today. And again, happy Valentine's Day. If you're already in the markets, you've got some things going on. We have the CPI numbers coming out this morning. Now, what do they mean? If you ask me, and again, this is just me, that CPI overall year over year in January, 6.4%. They were expecting 6.2%. That's a little bit hot, if you ask me. Even the core CPI year over year came out a little hotter than expected. What does that mean? Are we going to have higher rates for longer? Is that what the market is digesting right now? We had a knee jerk to the downside. We had a knee jerk to the upside. Basically right back to where we kind of started the session last night. So it's going to be an interesting trading day, but aren't they all? Stocks and markets in general are going to be under the spell of that CPI number, or the CPI numbers, as investors digest what that means to the FOMC and rates in the near future. Apparently, one of our Fed members, Lionel Brainerd, may have a new job at the White House. She may be replacing Brian Deese as the White House Economic Council Director. Something oxymoron about White House and Economic Council. Something about that, I don't know. Apparently, the Biden administration has decided to sell more of the Strategic Petroleum Reserve. He's got plans to sell another 26 million barrels, not huge, but in the face of efforts to try and replenish the reserves, OPEC already this morning has announced their estimates for greater demand in 2023 of about 100,000 barrels per day. So, well, VIX, last I checked, was pretty much just even, maybe a little bit higher at 2050. Dollar index, 102.95. That's been jumping around a little bit, as well as the yield on the 10-year. Last I checked, 3.66%. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love, especially today on Valentine's Day, are always welcome. Subscribe to our YouTube channel. You get notifications when we do go live. Thank you all for subscribing. We reached 19,000 subscribers over the weekend, so thank you very much for that. And we're going to take a look at these charts. Let's see who's here. Timothy, first in the room, winning the prize. Jules, Daryl, George. Lacey is just laying in her perch as the center of the universe. Will, yes, using the brain can sometimes be dangerous in trading. I kind of like Shaw's idea. You don't really need to know what the numbers are. Just watch how the market reacts to them. That's a very Jim Dalton-esque way to look at markets. He doesn't look at the numbers either. He just wants to know when they're coming out and uses the market's information, market-generated information, to look for his opportunities. Good morning, Shaw. Good morning, Alejandro. Good morning, Jason. Rooster. Good morning, Dan, Trader, Bill Phillips, Terry King, Rusty, Golfer, Peter, Sarah Hall. Prayers and love as always. Charles, JM, Octorapps, Pablo, Stephen, Barry Barry Brooks on NISA. Good morning. Good morning, Fred Decker. Happy Valentine's to you also, Sarah Hall, Serenity Trader. Good morning. Any UFO has been shot down today yet? Well, yeah, that's just crazy what's going on and how in the dark we really are all about what is actually going on there. JT, Marth Anthony, Trading Research, Don Clemens, Thomas Liao. Good morning, JT. I'm way behind the 8 ball after 2 days in the funded account. Super ticked off that I had filled what I filled. I would be good. Feel like forces are all against me here. Take your time, JT. Just getting into the funded account changes things, changes the decision-making process. Step back, chill a little bit, and just be patient. Wait for the right opportunities. And just every day start from zero. Fred, I heckle with love for Valentine's. Absolutely. Dr. VJ. Good morning, Lance. Good morning, Dowitzer, Manuel Caesar, and Shy. Back to business as usual this morning. We've got Make Hope Money today right after the market prep. You can join us for the Zoom meeting, or you can just watch it on YouTube. Yes, Fred, talking to JT, there's always struggles, right? This is never going to be easy. You've gotten to a level where you've got some expectations, and just make sure you dance with the one you brung and keep trying. That's the thing, is you can't give up, like Fred says. Nicholas, good morning. Just got a $2,000 move off the 730 whip. How's everyone doing? It's Nicholas, good for you. Good for you. Yeah, any more chemical trains to derail today? It's crazy this world is, isn't it? JT, you bet. You bet. All right. We're going to jump relatively quickly into the charts here this morning and see what we're seeing. I got half a cup of coffee here. I'm going to need this. All right. I'm going to be going local tonight with my lovely bride, Donna. It's a kind of a bar around here that's having a Valentine's dinner, filet, lobster tail, and all relatively reasonably priced. It should be good. I'm looking forward to it. Anyways, let's look at these. Let's look at these markets. Let's take a look at these charts and see what we have to see here. All right, upside structure remains in the S&Ps. 1, 2, 3. No real points of contact there. We added 25,000 yesterday in open interest. That's the estimate. Kind of unusual. We lost 2,400 in the NASDAQ, gained 25,000 in the S&Ps. A little bit of a divergence there, wouldn't you say? But we've been looking at both of these markets as though they're in a consolidation, a digestion, upside digestion, or even the potential for a bull flag. Well, we just looked above that bull flag here after the CPI number, and so far no signs of acceptance. CPI, bull flag, those are all things that we've got to keep an eye on here. So here's that top of that bull flag. We remember last week we were kind of testing it here. We went all the way to the low of it, tested the low of it on Friday, Monday, Tuesday, already a big range. The market really just kind of knee-jerking around, looking for some sort of direction. This trend line here is the top of a bull flag. If we accept above that, I'm looking for the next test to be of 4180, which we've already sort of kind of tested here. We had last week's high. Everyone's looking at this 4180 December high to see if we can find some acceptance for continuation to the upside, or if we're going to continue to pull back off of it. So far today, before the open, after the CPI, took a look and pulled back off of it. So do we have any overnight inventory? No, not really. Not really. I'm looking more at what we accomplished yesterday. We if you remember on Thursday, actually Friday morning, we talked about the lack of confidence on the downside move that we had on Thursday just by looking at the profiles. Well, we've pretty much now repaired all of those weak structures, all of those anomalies and holes that we had here on Thursday. So, and it makes sense that it's up against this trend line and up against the weekly kickoff high here at 41.80 that everybody is looking at. So we've accomplished the repair. Open interest increase yesterday is pretty encouraging, although it's a P-shaped profile, which would indicate short covering. So short covering meets new longs yesterday. We had pretty positive delta, so there was no delta divergence, which would have hidden longer time frame buyers. Take a look at the TPO chart here. This is without the overnight. So if you remember on Friday, today is Tuesday, right? So on Friday we had the late spike. We actually opened up above the late spike, tested to the base, and then rallied the rest of the day. The initial balance low extreme is the low of the regular trading hour. P-shaped, normal variation, extreme profile. Look where the market has traded down to in the overnight. Well, basically to our excess yesterday. Here's the Thursday session that we said, this isn't a very strong or confident downside move. We got a lot of different things sticking out here and a lot of anomalies, and we're probably going to come back and repair this relatively soon. Well, we did that yesterday. So my focus, I think, is going to be on the fact that we had buyers come in. We have a normal variation extreme day, which would lead us to believe that buyers are still in control. The overnight low at the excess. Here's the 30. We get an opportunity to look for longs against this trend line in regular trading hours. I'm going to be thinking about doing that. Why? Well, because it allows me to limit risk. We also have yesterday's high of value settlement, which is 41.47 quarter, and the point of control down here. We've tested almost to the low of value, weren't quite able to do that. So as the dust settles here and cooler hands prevail, I'm going to be looking for opportunities probably relatively close to this trend line early in the session if we get that opportunity. Let's take a look at crude oil now. It's about to open up. You're right, Fred. A P-shape weakens the market. It takes buying power out of the market. But when we look at the open interest yesterday, we had a pretty big increase. So what we're looking for is new business to continue this push to the upside. If it's going to happen, it's going to take new buyers, new entrants to the auction process. So, all right, here's crude. We recently got information that they're going to be selling some of the Strategic Petroleum Reserve, which I don't get. They've been talking about replenishing it. Now they're going to sell more. So much of what they do just doesn't make sense to me, and I'm sure plenty of you as well. We have OPEC saying that they're expecting 100,000 barrels a day more demand, and we're still largely range-bound here. I mean, this market, if you look at the last 3 months, we've got pretty solid highs. We've got pretty solid lows. I think we're really in short time frame control here. Aside from that fact, we're in rollover. Thursday, we'll probably be looking at the April contract with more volume. I will certainly let you know as I notice these things. I will let you know. But overall, I think we're in short time frame control here. We did add 23,000 in open interest yesterday, but I'm looking at that as a function of rollover. Remember, you got all these positions in this March contract that many of those positions are going to be rolled into future contracts, and it takes energy and attention from the longer time frame from getting directional to just trying to get a cheap rollover done. If they can get a cheap rollover done, they can save themselves or make themselves a lot of money. So that focus is, again, going to be on rollover. We're in probable balance here, looking at these lows here and the last week's high as our kind of area, and we're right in the middle of it. So I'm going to stay patient today. Here's our kind of low of balance. Here's our high of balance, last week's high. Really just kind of an area here that looks a little bit interesting, but do we have any overnight inventory? No. Do we open with a gap? No. We are, well, let's see here. We just opened. I don't see that we've opened with a gap. Looks like we've closed the gap right away. No overnight inventory. Naked point of control up here, naked point of control up here. There's all kinds of different short time frame levels that may or may not remain respected. We've also got a little gap down here. We looked into it in the overnight after the number came out. So where we are, kind of centrally located in the area of balance, a little bit of potential support down here near our overnight low perhaps, but I'm going to try and stay, again, very patient. We've got API after the close today, EIA tomorrow. Here's the NASDAQ. Contact. Almost a market state break the last couple of sessions here, but we've recovered from those levels. And again, losing open interest yesterday of approximately 2,400. Short covering takes buying power away from the market, but we're also in this bull flag. And if we can accept above the bull flag, I think that may be enough to bring new buyers into the marketplace. We've got upside structure, a upside digestion type area. Here's the 30. Let's get this right where it should be here. There we go. So here's the upper trend line of our potential bull flag. Again, very similar in the S&Ps. I mean, we've tested through it, no acceptance. We're back in range, back in value. I'm going to try and stay patient here in the NASDAQ. I mean, it looks like we're more at risk of opening with a gap in the S&Ps. NASDAQ, not so much. Again, digestion takes a lot of evening of inventory. Even though in short time frame we may be too long or too short, the longer time frame gets a lot of business done, and evening of inventories when the market is digestive in this way. Oh, let's take a look at the overnight and yesterday. P-shaped profile, IB extreme low, the regular trading hour session. We've got a relatively weak high here. So our overnight, very similar to the S&P, is tested to the excess from yesterday, found buyers. We've taken a look. We've now, in large part, taken care of any of the weaknesses from Friday's downside session. Again, we're looking, I'm going to be kind of focusing on this chart, because if we start to show signs of acceptance above this trend line, that might be the breakout to the upside that we're looking for. I'm not all that pleased with the CPI numbers today with regard to continuation to the upside in the S&Ps. I think, I think it came in a little bit hot. But that's just me. And we're trying not to think. We're trying to trade what we see here. So this trend line in both the S&P and the NASDAQ offers opportunity to limit risk at the very least. Gold. All right. Upside structure broke a couple of weeks ago. We've had a bear flag that broke last week. Are we seeing good continuation? If I'm thinking that the market off that bear flag should be more aggressive to the downside, I would be giving a grade of a D to the downside participation here. Okay. Yesterday we had our first positive open interest of 400 in almost 2 weeks. We've been losing open interest this whole time down here, which is typical what happens on a bear flag or a bull flag, in this case a bear flag, but we're not seeing good momentum. Not seeing momentum down here. We're seeing balance. So that's why I'm giving the downside performance, a D in gold. Here's the 30. So here was our bear flag. Market comes down to it. Low volume, small ranges, opposite direction. We broke out Thursday. No real continuation on Friday. Value continues to move lower, which is encouraging for shorts, but as far as the performance is concerned, bleh. Overnight longs probably reconciled. We had the big knee jerk during the CPI release. Kind of buoyant, this gold market today. Kind of buoyant. No gap. Looked below, looked above. It's going to be a tough one today in gold. Let's take a look at the TPO chart, see if that gives us any help here. So our bear flag, our continuation, not all that gratuitous. A lot of excess on this low. Might be looking for opportunities if this market comes down there. Family Guy. Good morning. Euro. What's the dollar doing? Dollar's moving lower, it looks. See, the talking heads are talking about the U.S. inflation rate over the past 12 months slows to 6.4%. They were looking for a a smaller number there, but that's still a lot of inflation. I don't know what these people are thinking or talking about. All right, here's the euro. Range bound. That's what this says to me. Short time frame range. Imbalance. Open interest was inert, minus 200 yesterday. Last week's high and low, the extremes, those will be my focus if I'm going to be trading this. Here's the 30. Last week's high would be the focus. Last week's low would be the focus here. We have naked points of control on both sides of the market. I really don't think I want to be doing anything right here. We do have some overnight longs. Again, they can be reconciled by this big high volume spike here at 7:30 with the CPI number. But as far as bigger opportunities, I'm focusing on these extremes. Last week's low, last week's high. Here's the TPO chart. Okay, IB low excess low here, low excess low here. We're not putting in finished downside auctions. However, that can be a sign that the market has gotten too short down to those levels. Now we've got, some excess leaving balance from yesterday. This is, of course, the CPI numbers. We're going to pay attention to where we are there. A little bit of repair here from Friday. Again, focusing on the 30, focusing on the extremes of last week's range, I think is your higher probability opportunities. The 10-year range, 3 months, November, December, February. You get a nice knee jerk in there today, but in the kind of medium or longer time frame, we're in balance here. Take a look at the 30. So we have excess yesterday at the end of the profile. We'll take a look at that shortly. We had overnight long inventory. Boy, did we take a shot all the way up to this naked point of control up here, just right at it, really. That's just amazing to me how visual these markets are. That would have been a hell of an entry. So last week's low, interesting area here. Here's our excess from yesterday. So far we have excess, higher excess than lower excess, but last week's low I think is going to be a tough nut for us to kind of accept down below. Excess yesterday, we don't see these kind of excesses that much on the 10-year. There's lots of weak highs and weak lows. We'll have to watch and see how the rate continues to change today. It's back higher just a little bit now. 3.72 the last I can check here. Let's take a look at the natural gas and we'll get on to make Hogue money this morning. What's this say to you? Balance. Downside digestion. Balance. Evening of inventory. Added 14,000 in open interest just yesterday. Interesting. Difficult to understand what it means in this context. Looks like we're in short time frame control. Last week's high and low, the extremes. Take a look at the 30. Overnight inventory long. No gap close, but centrally located in the area of balance that we're currently in. Not in a hurry. I am not in a hurry in this. Here's the TPO chart. Normal variation, neutral day, opening outside of it with a gap. A gap close can be an interesting spot. But again, if we're looking for short time frame levels to the downside, look at how many there are. Gap close, value high, point of control, value low, low of the day yesterday, low of the extreme. Be patient, wait for structure. Rarely am I going to tell you to look for structure because it just costs in trade location. But in these cases today, I think we're going to be looking for some sort of structure and then hope that the market gives us an opportunity cheap enough to take advantage of it. Morning, Randolph. Good to see you. Good, Fred. I'm glad you're looking forward to make Hogue money. So take it easy on the candy today, ladies and gentlemen. I know that it is Valentine's Day, and I'm sworn off of most candies. If there's a York peppermint patty around, I'll probably have just one of those, but we'll see. So looking forward to make Hogue money. Happy Valentine's Day. Let's take our deep breath. Stay humble, grateful, and creative and centered in your trading today. Didn't do anything yesterday. It was really kind of disengaged from the market. So today is Synthetic Monday. I'm going to take it easy. So I'm looking forward to make Hogue money where you guys can tell me what to do. And then we'll see how that goes. And if I don't see you, trade well. And we'll see you for the coach's playbook, and then again for the reflection at the end of the day. Looking forward to seeing how your day turned out, how this day turned out, how my day turned out, and then we can get on to the Valentine's Day festivities. Have a great trading day if I don't see you in a few minutes. Blessings to you all. Get out there and profit now.